Good morning, everyone. Welcome to Andean Precious Metals conference call for the fourth quarter and year ended December 31, 2022. This is a reminder that this webcast is being recorded. My name is Trish Moran. I'm Andean's VP of Investor Relations. Before we get started, I would ask that you view our slide presentation for cautionary language regarding forward-looking statements and the risk factors pertaining to these statements. Our MD&A, financial statements, and relevant filings are available on SEDAR and on our corporate website, andeanpm.com. With me today is Alberto Morales, Executive Chairman and CEO of Andean, Juan Carlos Sandoval, our Chief Financial Officer, and Segun Odunuga, Executive Vice President, Finance. Following management's formal remarks, we will then open the call to questions. And now over to Alberto.
Thank you, Trish, and welcome everyone. 2022 was a challenging year. While we met our production targets, we fell short of achieving our guidance for all-in sustainable cost per ounce. Operationally, it was a mix of positives and negatives. On the positive side, our mill at San Bartolomé continued to run efficiently. We maintained grade, and we signed a new contract for feedstock from La Bolsa. That material underpinned our growth for the fourth quarter performance. However, we had some operational setbacks in 2022. Recoveries, which have historically averaged more than 80%, averaged 77% for the year. The recovery issue, together with the decline in the average realized silver price, global supply chain issues, and the negative impact of inflation in our cost impacted our profitability metrics last year. That said, we preserved our balance sheet with about $90 million in liquidity, which is vital to advancing our growth aspirations. There are three critical steps we are taking to ensure that 2023 is a better year. Firstly, we're actively addressing the recovery issue by leveraging our technical expertise and are working with external consultants to further metallurgical testings and insights. These same consultants have been retained to optimize production in our processing plant. Secondly, decreasing our cost, both at site and at the corporate level. This is a key priority for us. Lastly, we're in discussion with several third parties, feed suppliers, to lock down high-grade materials to augment our resources and increase the life of mine of our San Bartolomé facility. Securing new contract is very important and a priority to our growth strategy in Bolivia. As disclosed in our MD&A, we updated our estimated mineral resources as of year end. Based on our current mix of materials being through the mill, with about 50% of our 43-101 ore and 50% purchased materials, we have approximately 2 years of mine life remaining. On top of the Pallacos, and included in the mineral resource table, is the initial inferred mineral resources estimate for our dry stack tailings facility, which we announced last November. When combined with the current fines disposal facility mineral resources, our 2 tailings facilities contain resources that could also extend the life of mine of San Bartolomé. We are continuing to conduct metallurgical tests to assess the economic feasibility of extraction, and will provide the market with an update on the results during 2023. In addition to organic growth in Bolivia, we are pursuing transformational growth acquisitions. We are focused on identifying the right transactions, which will form the foundation to execute on our growth strategy. In terms of our acquisition criteria, we are looking for production or near production target located in the wider Americas. We're working several avenues on both organic growth side and the M&A side. We know what we want from an acquisition, and we will continue to review targets until we find the right one. Market turbulence does not look like it will end any time soon, Given the current geopolitical climate, the worldwide monetary policies being followed by central banks, and the unknown impact of the recent collapse of some regional banks and a major global banking institution. These factors are further compounded by the data around supply and demand of precious metals, specifically silver, showing that demand for the metal is currently outweighing supply. It's a compelling time for those looking to invest in our industry on either an asset diversification or allocation basis. Andean is well positioned with a debt-free balance sheet and cash on hand to facilitate our transformational growth and advance our vision of becoming a multi-jurisdictional mid-tier producer. I would like now to hand the call over to Juan Carlos Sandoval, our new CFO. JC assumed the position effective December 1st and will review the financial highlights for the fourth quarter and year end.
Thank you, Alberto. I am pleased to be here for my first analyst call with Andean and to provide further details on our fiscal 2022. In the fourth quarter of 2022, we produced 1.2 million ounces to end the year with a total of 5 million silver equivalent ounces. The fourth quarter was bolstered by material from La Bolsa, which provided Andean with an additional 200,000 tons of material at a fixed price per ton. La Bolsa material was the principal meal feed throughout Q4. What remained of that material was processed in January of this year. At 5 million ounces, we achieved our guidance. However, production relative to 2021 was down by 14%, mostly due to the recovery issues already discussed by Alberto. Revenue for both the fourth quarter and the full year were down 18% and 25% respectively. The reason for the decrease is twofold: a significant decline in average realized price of silver per ounce, as well as lower production impacted by recovery issues. While we do not control the silver price, we do control when we sell our ounces. As long as our liquidity remains strong, we do not have an immediate need to force the sale of our silver inventory at low prices. You may see us opportunistically withhold metal sales to obtain better pricing. Our company, like the entire mining industry, felt the impact of inflation on consumables. Cyanide, diesel, and reagents required in our production process were up as much as 50% year over year, and this impacted our costs. That said, our operations continue to generate positive gross profits. The next slide shows our per ounce cost metrics, which also suffered due to the negative impact of high inflation, compounded by a 14% reduction in silver equivalent ounces sold. G&A in the fourth quarter was 4.9 million, bringing the total for 2022 to 14.9 million, excluding corporate development cost of 1.8 million. We believe that we should be able to trim down the $8 million in the coming year to around $6 million due to a decrease in non-cash share-based compensation costs and general savings at the corporate level from moving the majority of our corporate functions to Mexico. Our focus is on achieving operational efficiencies and prudent cost reductions in 2023. Moving on to the next slide. Despite the difficulties already mentioned, adjusted EBITDA for 2022 was positive at 3.5 million. While economic conditions remain volatile, it's important to note that we have preserved our best-in-class balance sheet. As of December 31st, we have more than 90 million in liquidity, including $80.7 million in cash, 5.3 million in marketable investments, and 4.1 million in VAT certificates. Importantly, we have no debt or other liabilities related to financial instruments often associated with junior miners. Our working capital continues to improve. increasing to 94 million from 86 million over the last 12 months. Put simply, we have a solid foundation for growth. Given our strategic goals for the year, including growth, production, optimization, and closing an acquisition, we have decided to temporarily defer our graduation from the TSXV to the TSX. Moving the timeline on this initiative will give us time to complete the work required on our internal controls and the implementation of our ERP system. And now over to Shagun, our Executive VP of Finance, to update you on our NCIB program and discuss guidance for the upcoming year.
Thank you very much, Jesse. I'm happy to have joined the company. Last fall, we launched a share buyback program to deliver value to our shareholders through volatile markets. We are fortunate that our strong balance sheet and liquidity allow us the flexibility to both buy back our stock at prices and concurrently pursue transformational growth opportunities. As of the end of last week, we have purchased a total of 706,000 shares at an average price of 86 cents Canadian. We will continue to monitor and consider the buyback programs as long as the share price does not reflect the true value of our underlying business. With respect to our guidance for 2023, our production guidance for the year ahead is expected to come in around the same as last year, in the range of 4.8 to 5.2 million ounces of silver equivalent. All-in sustaining costs are expected to improve to between $19.50 and $20.30 per ounce per ounce sold. In 2023, we intend to invest $9 million in capital expenditures, including over $5 million to address the tailings recovery project earlier mentioned by Jesse and Alberto. Overall, we are well positioned for the year ahead and are implementing the changes necessary to improve our operational and financial results. This concludes our formal remarks. I will now turn over to Trish.
Thank you, Shagun. We will now start our Q&A session. If you have any questions, please type them in the question chat window. Alternatively, you can raise your hand and we will open a line for you to ask your question. If you are joining us by phone, you can submit your questions via email to ir@andeanpm.com. If we are not able to answer you here, I will get back to you after the webcast. We have our first questions from John Gilio. John, can you hear us?
Yeah, hi guys, can you hear me?
Yes, we can.
I'm wondering if you could just explain what exactly the CapEx is being used for at the FDF and the DSF. Should this be kind of interpreted as the beginning of a tin circuit build, or just kind of what is it?
Thank you very much, John. What we plan to do for next year with respect to the tailing dam facilities, based on what we are projecting, we will do some feasibility on the silver recovery and also spending some additional capex on buying some equipment that will help us to move the project forward. Without disclosing too much information, we are working towards on silver recovery instead of working on the whole overall tailing facilities. We just want to be more strategically focused on that project.
Okay, and when do you think we could actually get a decision to go forward with this or not? Is that coming this year?
We are looking at probably in the second half of this year, when the board will give us the final approval to move the project forward. We are doing all the preliminary work between now and second half of this year.
Okay, excellent, thanks. The next question would be, what do you guys model, or what are you expecting for silver recoveries to drive 2023 guidance figures?
Based on what we are seeing right now, and as we disclosed in our MD&A that we have done some metallurgical testing And we also engage a technical consulting firm to help us optimize our production and also help us with the metallurgical testing. So far, the result that we have seen has been very positive, and they are trending on a very high level compared to what we have seen in the past. So we are, I would say, we have some level of confidence that what we already put out as guidance, we are already projecting for 2023 will come out the way we are projecting.
Okay, so in terms of an actual recovery number, I guess, what are the goalposts here? Better than 2022, but not as good as 2021 for recoveries?
I would say it's something, without disclosing too much information here, I would say that we are something similar or slightly above what we have in 2022.
Okay. And is there any plans for spending on San Pablo or any of the exploration this year? And I guess if not, then what's kind of the longer term strategy on these projects?
Right now we cease spending on San Pablo in order for us to focus on other strategic opportunities that we are pursuing. So we are not planning to spend any additional money on San Pablo right now, but we want to divert the capital to something very important to us.
Okay, that's it for me. Thanks.
All right, we have a question online, and that is, what is the main contributor to our all-in sustaining costs, and how can it be reduced?
Thank you very much for that question. With respect to our all-in sustaining cost, in order to augment the issues that we have with respect to our recovery, we move away from our production plan in terms of mining. Our mining cost was very high at our Payako deposit based on the materials that we are mining in that particular deposit, and also through our purchasing of materials from the cooperative, which is the I'll call it the suppliers of the materials that we process. The cost was a little bit high at that aspect, but we already identified additional deposit that we are going to mine, and also the materials that we are purchasing at a fixed cost based on the new contract that we have right now. That will bring down our all-in sustaining costs for the 2023.
All right, we have one more question. Could you elaborate on M&A? What happened since last November? Do you have any active open files? Does it look promising? And are you looking in the US of A?
Thank you, Chris, and thank you for that question. I will address it. Yes, we do have open files. We have reviewed, I would say, more than 20 or 25 potential targets. But right now we're down to what we consider to be the most promising one. We're looking as to how can our balance sheet be more accretive to our shareholders with respect to the potential transactions that we're at. Current market conditions especially have shifted in towards a window of opportunity for us that we believe, in which a strong and liquid balance sheet could be accretive in some instances. While I cannot go into a further level of details, I would say that yes, we do have now reduced this to a handful of opportunities. For the time being, those ones that we are looking at are primarily based in the wider Americas, as opposed to the United States. We were in the past looking to assets located in the United States, but we are feeling that the ones we're looking at and the open files that we currently have look more promising in the wider Americas.
All right, our next question is, in other investments, there's an amount of, with a fair value of $1.5 million based on fair value of $1 per unit. Could you tell us what kind of investments these are?
Thank you very much, Trish, once again. One of the company overall objective is to preserve our liquidity and capital, at the same time generate some, if possible, some returns on those investments. As we disclosed in the MD&A and the financial statement, we have marketable security relating to Santa Cruz. We took advantage of the increase in the share price of Santa Cruz, and we sold certain number of shares, and we invested this money in money market that is generating us some decent returns. So that's what we classify as other investment.
All right, we have one last question, and that is, how busy are you with procuring material purchase opportunities in Bolivia, and do you expect to have new agreements signed in 2023?
I want to emphasize on this side that increasing the life of mine of our San Bartolome facility, it's a priority to us. And yes, we are very active on this front. We have a team of people actually scouting possibilities in Bolivia, and we're coming across interesting opportunities that we're hoping to capitalize in the short term, meaning within the next quarter or two, that will significantly increase our life of mine. We're hoping that we would have the ability to come forward with these opportunities, but it is still yet to review the deposits and as well as engage in negotiations with the relevant parties.
We have one last question on M&A, and that is, what is the size or range of the target you are looking at?
Thank you, Trish. For obvious reasons, we cannot disclose much of that, but what we can say is that, as Alberto mentioned, we have selected a handful of good opportunities. What we're looking for is assets with production or near-term production that will be most accretive to our shareholders.
All right, that's all the questions for today. Alberto, over to you.
Well, thank you, Trish, Segun, and JC, and thank you to everyone for listening today. Before closing the call, I would like to address our recent share price volatility. We are seeing the impact of ETF rebalancing, which we believe is not reflective of our underlying business. I would like to reiterate that we are confident in the steps we're taking to improve performance. As the major shareholders of this company, I have to admit that I am not happy about last year's result, but I am also confident about our prospects to increase the life of mine of our San Bartolome facility and the prospects of our M&A efforts that are currently underway. We are preparing for continued volatility in the year ahead, and we're actively working to strengthen our business. Additionally, we are excited about the possibilities for this upcoming year. With our debt-free balance sheet, our company has a strong foundation to support what we have defined as our two-pronged growth strategy, meaning organic and M&A growth within Bolivia and acquisition growth in the wider Americas. As always, if you have any additional questions after the call, please do not hesitate to reach out to us. Once again, thank you all very much for joining.
That ends today's call. Thank you.